Hello traders, Bash the trader here, and I'm going to be introducing myself, right? So I'm a supply and demand trader, professional supply and demand trader, which means that I basically use supply and demand of price. So in this video, I'm going to be talking about the dollar index, right? How you can leverage on the dollar index and still be able to have a strong edge in the market, right? So first of all, what is the dollar index, right? So basically, the dollar index is an index of the value of the United States dollar, right, relative to a basket of foreign currencies, right? Is often referred to as the US trade partners currency. So what this means is that the dollar index is a metric, right? Is a metric used to measure the value of the United States dollar. Simple. So let's talk about how you can use the dollar index to have a strong edge in your technical analysis, right? So let's say you want to trade USD currency pair, right? You want to trade a USD currency pair, and you happen to find yourself in a situation that you don't know what to do, right? We know that it's two things that happens in the market. Is either the market buy or the market sell. Is either the market appreciates in value or the market depreciates in value. So now let's assume that you happen to be in a situation whereby you are literally confused on what to do. You don't know whether to buy or you don't know whether to sell, or you are in a buy and the market is slightly going against you and you don't know what decision to make next, right? Or you're in a sell and the market is going against you, that is, the market is buying when you are in a sell and you don't know what to do next. You don't know whether you should cut your loss short. You don't know whether to close your positions, or you don't know whether to hold. You don't know, you're just literally confused and your emotions are starting to come into play, right? So how do you have a strong edge in the market? How do you have a strong bias, right? How do you have a strong directional bias using the dollar index when you are trading USD currency pairs, right? So what you can see on my screen right now is the split screen of trading view, and I have the dollar index open and also the USD yen open, as you guys can see. So this first screen here is the dollar currency index, right? And this second screen here is the USD yen. So I happen to be in one of these trade. I think was it the day before yesterday. I can't remember, but yeah, it was yesterday. Was it yesterday? No, the day before yesterday. Yes. So I happened to be in USD yen, right? So I found myself in a situation whereby I couldn't decide on what to do next, right? And I was confident about my analysis, and I want to show you guys what gave me that confidence, and how I was able to hold the trade. So as traders, right, you will always find yourself in situations whereby you are confused, right? Let's say you are in a buy and then market starts to retrace on you, and then you don't know if it is going to go in your direction, right? It happens to traders as well. Sometimes your analysis just doesn't move with the market flow because you are not the one moving the market. That's the truth. That's the reality. You are not the one moving the market, right? The guys that are moving the market are the market makers. They are the big institutions, the big banks. Those are the big boys that move the market. So you are just a tiny retail trader, trying to tag along, right? So, but how do you have a strong hedge, right, in situations like this, especially when you are trading USD pairs? So let's look at the price charts. Let's do some analysis on what we can what we see. So let's start with the dollar index, right? So let me use an example of the trade I took the day before yesterday, which is USD yen. So I'm going to look at where I entered on the price chart. First of all, let me confirm the time frame. So this is 1 hour, 1 hour. Okay, good. So let me see where I entered the USD yen from. Okay, good. I found where I entered. So I entered the USD yen here around this price level, right? Yeah, around this price level. But the market, I need to take out these guys. Let me hide all this. Okay, but the market started to appreciate in value before the big drop. As you guys can see, I made about I cut about 300 pips on this pair, so it was a crazy sell-off, right? But yeah, but before that happened, there was the manipulation that occurred on the dollar, right? So if you look at the crosshair, you will see that these, when I'm moving the crosshair, the one at the top is also moving. That is the screen here. So it happens to match the timing, right? This particular candlestick or this particular time is the same thing. It's the same event that occurred at is the same event that occurred on the index, right? So if I'm on the 15 o'clock candlestick here, you can see it's also 15 o'clock right here. So as you guys can see, 15 o'clock, so it matches the timing. So let's continue. So I was in this pair and there was a slight retracement to the upside before the big drop, right? But if I had closed my position out and said that the market was going to buy, which it did not, then you see how you're going to eventually take a very big loss on that trade, right? So how can you avoid that, right? So if we look at the dollar index and the USD, and you can see that the price charts, they look the same, right? It's just slightly different, right? You can see that the sellers are here, right? And on the dollar index there was a selling action as well. You can see that the price just looks the same, but it's different, right? In such a way that the structure is not the same. So let's look at the dollar index here, right? So what was happening at this time, right? The price was buying, and I was looking at it that, is there any resistance here, right, that is going to stop the price here? I couldn't really find any resistance point, right? I couldn't find any resistance on the price chart, right? So that was the first thing. I noticed. I saw that there was no resistance, right? Resistance is just basically what a is just like an let me see, an elastic rubber that stops the price from either from going higher. That's what we call resistance, while support is just the other way around. It prevents the price from what's going lower. So now I couldn't find a resistance point, all right? But what I noticed on the what's it called, on the dollar, right, was that there was a lot of resistance, right? So if you look at this area here, so let me use the text tool. You can see here we have resistance, right? We have one resistance here. In fact, let me not say one resistance, but overall resistance, right? So I'm going to use the brush, and so what we can see here is that there's a resistance of price going on, there's another resistance of price going on, right? So we know clearly that there is something preventing the price from going higher rather. Why is it that when the price gets to this resistance level, there is a reaction, right? So let me draw a line. I'm going to grab this, so let me just pull a line up like this. So what you can see is that something is preventing the price from going high. Meanwhile, at this time, right, on the USD yen, there was no resistance. The resistance that we had was taken out. There was a resistance here, right? It was taken out, and yeah, and here we have another resistance here that was also cleared out, right? But now at this time, at this candlestick, this 15 o'clock candlestick, there was no resistance I was literally looking for that could prevent the price from falling. Although we have a supply here, right? This area I wouldn't really call it a supply, but it's because sometimes this area gets run out, demand outpace supply, so I wouldn't really call that something to hold the price, right? So I was in a situation whereby I couldn't decide on what to do next, but I had very strong confidence in my analysis, and you know I didn't give up on the trade, right? Because it's good to have knowledge, right? It's good to have a very good skill in something. When you're learning something, make sure that it's top notch, right? You don't just learn something halfway and then think that, oh, you already have a strong edge on that. No, trading is not like that. You need to make sure that you keep learning, and you're improving your skill day by day. You're learning from every single trade you enter. You don't just enter a trade and then you move on that trade and say, oh, on to the next one. No, you learn on every trade. You say, okay, why did I win this trade? What was the reason? Why did I take a loss on this trade? What was the reason? Right? So you always play back. So let's continue. So what we can see is that you can see the structure is quite different on the dollar index here, and you can see, right? So that resistance point at this time was nowhere to be found. So I went to look into the dollar index, right? And I found a lot of resistance, and I knew that the price is going to drop. Somehow the price was going to drop from this area, right? So if you mark the top of that resistance on the dollar index, you would see that there was a supply at the top. And where do you find supply and demand? You find them at the highest and lowest point. The good supply and demand are at the highest and lowest point, right? Which is strong resistance and strong support. Like that's beautiful, right? Let me increase the font size. Let me decrease the font size rather. I think that's too much. Then text wrap. Yeah, good, beautiful. So I saw that there was a resistance point here, right? That was gonna stop the price. So let me actually rewind this backward so that you guys can see what happened. Good, beautiful. Then also this one as well. Okay, so let me 15 o'clock, right? Yeah, good. So what we can see is that the price was pushing higher, right? The price was pushing higher. What just happened right now? I'm not really sure what happened. I will have to play back to real time. Okay, good. I don't know, for some reason this rewind stuff is bugging out. How do I deselect okay, right here? Yes. But if I hit exit, it's going to take out the whole thing. Let me try again real quick. Wow, this is weird. Okay, let's do it one by one then. So on the USD currency index, right, the DXY, what we can see is that there was going to be a change in direction of the market, right, from demand to supply. So as the price was approaching this price level, right? This 107,420. I knew that there was going to be a reversal. I was so sure, right? I was so sure. So I held my trade. So what we can see is that there was a news on this day, right, at 7 p.m. the FOMC statements, right? So there was a manipulation that occurred before the big sell happened. So this little buy that you see here is just what? Manipulation, right? Just to take out a lot of people's stop loss, to take out a lot of traders, and then go in the direction that is the characteristics of the market makers. They take out your stop losses, take out your, whatever you have there, they take it out, they take your money, and then you see a very big reaction. So but me, because I'm experienced and I know what I'm doing, right, and I'm very skillful, in demand and supply, I knew that there was going to be a reversal, right? So the US dollar currency index gave me a very strong edge on this particular trade. So that's why I'm doing a video about it, by the way. So as you guys can see that there's a resistance that's going to stop the price. So if you play the price, you'll see what happened here. So let's play the price. There's forward, right? You can see immediately there was a drop. So I knew that the price was going to drop all the way all the way down. I knew it, right? I knew it. That was my markup, that was my analysis. So let's continue to play the price and see what's going on. So as you guys can see, there was a very long candle. That was when the news was released that the Feds are hiking the interest rate to clamp down on inflation. They increased it by 75 basis points, right? And then the dollar started to be very, very weak, right? It became very weak. So when it's weak like that, there's going to be a drop, right? A supply, right? So if you look at what happened on these USD yen as well, it's the same thing, right? You see, it's the same thing, right? Price started to drop, right? I saw a lot of resistance points here, but I didn't see resistance point here that is going to prevent the price from going higher on the USD yen. But I saw something clear on the what? On the dollar index. So if you guys are trading, sometimes if you are trading the USD pair, sometimes you can take a look at the DXY to help you have an overall directional bias, right? So you see how the USD yen started to sell. At this point, my take profit one was hit. I took my sell here. I added more entries and all, and it was just a very huge drop, right? And I kept on holding. So look at what happened next. Oh, I fast forward to real time. Anyways, that's good. I'm just trying to okay, deselect. Good. So this pair dropped about 300 pips, right? I took my entry from here, right, all the way. I added more entries and all. I flipped my account, 200 USD account, 500 USD account, 4,000 USD account, 2,000 USD account. All the accounts were in profit, as you guys see, right? It dropped heavily. So if you look at the DXY, let's continue to play the DXY. Play fast forward. You guys see what happened, right? You guys can see what happened, right? Good. You see how it's literally dropping, right? Literally dropping. Where's this one gone to? Let me reset the chart. Okay, good. So you see how price absolutely slammed down, tumbling action going on the dollar index, right? And when the dollar index is selling, it means that the other pairs that are attached to the dollar are going to be buying. So which means that the Euro USD, the NZD USD, the AUD USD, all of them are going to be what? Shooting to the moon. They are going to be shooting up. So we'll look at that. We'll take a look at that. I will just use the Euro USD as an example, right? But let's look at something else now. So if we go to the monthly time frame, right, on the dollar index, let's go to the monthly to see something that I saw when I was looking at the DXY on the day I entered the USD yen, right? So let me delete this so that we can see the chart clearly. Good. So if you look at the monthly time frame here on the DXY, what we can see is that there is a resistance of price, right? There is a resistance of price here, right? And this is on the monthly. And whatever happens on the monthly, whatever you find on the monthly, there is always a very big reaction, right? That's one thing you need to know. There is always a very big reaction. So because it is the monthly time frame, that is 1 month, for a whole 1 month something occurred, which means that the time it gets back to that area, the reaction is going to be very big. You can see immediately the price taps into the monthly supply here that we have here, the monthly resistance, however you want to call it, the price began to sell. So when the price was appreciating in value for just a little bit of time, I'm not even sure where, let me go look. The actual price level price was in 107, right? Now let's go back to the monthly. When the price was around this 107 price here and it was pushing up, I saw, because you are trading in real time, right? In real time, I saw that the candlestick was going high. Meanwhile, I knew that the price is in a good supply area. The price is in a good supply. The price is in a good resistance point, which means that there's going to be a reaction very soon, whether you like it or not. And there was a reaction, right? So let's go look at the Euro USD now. So I'm gonna leave the DXY open like this, and let's take a look at the, what's it called, the Euro USD. So let's look at this here. Euro USD, where are you? Okay, right here. Good. Let's take this out. So let me be sure that this is okay. Good. This is well aligned. So you guys look at the charts. Can you guys see how the Euro USD price chart is, and the USD, the dollar index price chart? You can see that it's almost the same, but it's inverse, right? It's upside down. You can see there was up and down movement here, there was up and down movement here, right? There was a very long candlestick here, there was a very long candlestick here. You guys see that the price chart looks the same, but is in the other way, that is, it's inverse. So if I flip this over, you'll see that they will happen to be almost the same. So where is that flip again? Okay, right here. So I'm going to invert the scale. Guys, look at this, guys. Let me make sure that they are well aligned, so that we can actually see how you can see closely that the price chart is the same thing, right? It's the same thing. You guys look, it's just that there is just a little bit of structural difference. It's the same thing. It's the same thing, to be honest. To me, what I'm saying is the same thing, just little tiny structural difference. It's the same thing, right? But how can you take advantage of this? Now let's flip it back, invert the scale, right? So when the dollar got to this resistance point, right, you know that in your head, you know that that is the final resistance point for the dollar, and there's going to be a change from demand to supply, which means that you can buy the Euro USD as well, right? Because why? The Euro USD is also in a support level, right? In a support level, or demand level, however you want to call it, right? Let's do it like this, and let's do it like this. Oh no, that's not what I wanted. I want the horizontal ray, so let's do it like this. Cancel. So good. You guys can see what's going on here, right? You can see that this area is a demand of price, right? There's a support. There's a support here. There's a support here holding the price, right? And you know that the dollar is going to be weak, right? So you can take advantage of this and what, open a buy position on the euro USD as well. If you are selling the dollar index, then you buy the euro, right? You buy the euro USD, and when you buy, you're in profit. You're in good profit. You can see how the euro, is this in real time, by the way? Okay, yes. Okay, I think the market is closed, that's why this is not moving, I guess. Yeah, the market is closed, I think so you guys can see what's going on. You can see that the chart is the same. You can see, right? You can see there was a little bit of retracement, right, to the downside. I think this happened yesterday, right? And then the price bought again from that same area. It bought it all the way up, and then it started to sell again. Why did it sell again? Because there is what, resistance, right? There is resistance. Look, watch this. Let me show you something. Watch this. What is this? Resistance. There's a resistance that's going to what, prevent the price from going higher. That's why it sold again. So there is another. Let me see. Is there resistance here? Let me see where the let me see where this happened. Okay, I'm not, you see what I'm saying, right? You see how there is no resistance point here. You can see this is just an open space on the dollar index, but meanwhile on the euro USD there is what, resistance. So you can see how you can take advantage of this type of price movement. So that will be all for now, and I hope you guys enjoyed this video. I hope you guys find something beneficial from it. I hope you guys find something meaningful from it that you can incorporate into your trading, right? Make sure you like, make sure you comment, make sure you subscribe to my YouTube channel, and peace out.